Taking a quick look at gold and silver, partly a reminder that volatility cuts both ways and why I think we could be looking at a bounce at least over the near term. Now, starting on this chart, we've got gold on the left, silver on the right, with the top row being monthly chart, the bottom one being weekly. What I'm really highlighting here that volatility in January was unprecedented by this data record. So I've got data going back to 1975, thereabouts, and by a long shot, you've got like a 22.5% range on gold futures, and I think it's like a 41% on silver. It's exceptionally highly volatile. Interestingly, the last day of the month-end flow, we saw quite a sell-off on both markets, and that resulted in bearish reversal candles on the weekly charts. So it raises the question, do you think that's a reliable reversal indicator? The problem I find when you have reversal patterns, or the classic ones, on such high level of volatility, you need to ask yourself, is that a great reward to risk? It might be a reversal, but more often than not, what I find is that when you have like a massive spike on a candle on most time frames, a significant amount of the time following that, the volatility actually diminishes and you end up getting trade around the lows or the highs of that range. You don't necessarily get a full-on V bottom or V top. They do happen, of course, but I don't know the exact number, but it's just not as often as you'd like it to be. And when they're this volatile, I think it's a safer bet to think that we're going to be getting choppy trade. So you think of the psychology behind it, you've got people who are chasing these prices up, got burnt at the highs. Now they're debating, do they want to go back in with burnt fingers? Fundamentally, it might go up, but I don't think we get them straight line. Anyway, let's go back down to the actual daily charts at the moment. And you can see that we had quite a sell-off earlier today in Asia. It's low liquidity, very thin volumes, and prices. It's almost like markets are looking for the liquidity, and there wasn't really a lot of volume there. And now we've got a full reversal of those earlier moves, and it was trading higher. In both cases, you've got gold low so far as held above the December high, and you've got the silver futures holding above the 20-week exponential moving average and the weekly VPOC. Now, I'm not looking for a wonderful move back to those record highs. I think that's unrealistic, but maybe we'll get some sort of a move within this range. Out of the two, the structure on gold is arguably more bullish because you can see that we had a movement down here, retracement against that, and the current move is holding above that swing high. The silver market, however, we've got an aggressive move down, classic dead cat bounce, and now it's trying not to roll over further. So I think whilst there's potential for bullishness over the term of both markets, probably more likely the gold might be the outperformer, but even still, silver is more volatile, so it might have some of its own potential. Chart I'd like to finish up on as well is that we're looking at silver risk reversals, and that's basically telling us that because they're positive, there's more call demand than put demand, and they're trending higher. So despite the fact we've got this aggressive sell-off, options positioning has still got quite a lot of activity at relatively high levels. So that could suggest that there's not conviction from options traders that we're going to get continued downtrend. It's not a perfect signal, of course, but it could give some sort of a cushion against that move. And if we look at the gold risk reversals, yes, it's moved lower prices. Again, they're still remaining positive, so there's more call volume than there is put volume. So again, I think out of the two, you might find that if we do get a bounce, gold might be the one that takes out the swing high if it can. But then again, silver is more volatile in percentage terms. Anyway, if this is useful, wish you best of luck with your trading.